Kids struggling to find work are turning to Ron Paul for answers now that it's clear the current administration's policies are creating massive unemployment for 16 to 19-year-olds. Look at that chart. The White House is so worried it's ready to try an out-and-out bribe. Can't make this stuff up. Tonight, President Obama himself is announcing that the federal government will throw $1.5 billion towards a summer jobs push for young people in hopes of getting their votes this November. Here now to discuss are my freedom fighters, Fox Business anchor and my colleague Liz Clayman, Bridget Harrison, Montclair State University law professor, and Benjamin Powell, Independent Institute senior fellow. Elizabeth, is it any of the government's business to provide jobs for young people on the summer before a presidential election?
Judge, if you had your way, the government wouldn't fill potholes, okay?
Not the federal government.
Not the federal government. In this case, I don't mind that the government is doing something to try and get the youth employed. Need a few more details on exactly what they're going to be doing, but this is one thing I think that you can't be cynical about. Look at it and say, the youth isn't going to vote anyway. Trust me. Just do it.
Put the politics out of this, Ben Powell, if you could. Just economically, where is that $1.5 trillion better spent? In a federal government jobs program or in the bank accounts or wallets of the taxpayers from whom it was extracted?
Leave the money in the private sector. The government's not going to create value with these jobs. But if the government wants to do something to promote youth employment, instead of throwing money at the problem, it could take regulations out of the way and actually promote employment. So it's no accident that youth unemployment's really high. They're the ones that are hardest hit by minimum wage laws that take them off the bargaining table where they can't find employment. So 98% of hourly workers aren't affected by the minimum wage. Their productivity is much higher. But for young people who have less skills, they are affected by it. About half of people affected by minimum wage are under 25, and a quarter of them are teenagers.
All right,
it's no accident that in a recession, these are where you see the unemployments go up to about 25% or 14%.
Got it. Professor Harrison, on the politics, is this very obvious or is this meaningless?
Well, I
that
think
the president is throwing cash at young people who seem to be going to Ron Paul in droves for a variety of reasons.
I don't know that the young people who are going to Ron Paul are the people being targeted by this. I mean, what we're looking at here is mentoring programs targeting particularly economically deprived young people. And what we're seeing is those were the hardest hit by this recession. We also see significant drops in summer employment. And so politically, this is a very astute move by the president. Nonetheless, he will wind up getting a significant chunk of this support. And I disagree. What we've seen is increases in the turnout of 19 to 30-year-olds.
Isn't it odd that he has this kind of disposable cash at his discretion?
Well, that's a big question.
That's a lot of money,
definitely. Well, people are looking at that and saying, well, where's it coming from? But you have to look that it didn't just materialize. This was built in as part of other programs and plans.
Got it. Tonight we're learning that Bank of America, this is only in America, tried to foreclose on a Florida homeowner over a typo that amounted to an error of 80 cents. Tom Moody was approved for a mortgage modification program, but nearly thrown out of his house after he accidentally hit a 0 instead of an 8 while trying to make a payment over the telephone. Public outrage brought Mr. Moody's case to light, and Bank of America restored him to his modified status. Isn't this more evidence that bailouts reward incompetence and hurt the little guy? Is this the way big business operates?
I think it is. You know, Judge, I'll tell you a story. I paid my mortgage about 2 months ago. I put in the wrong amount on automatic billing. The mortgage company held my mortgage payment for a month, didn't credit my account. It was taken out of the bank. This kind of computer glitch is, I think, something endemic to how this modern economy is working.
All right, Ben Powell, this is not to indict or crucify Bank of America. This is one of several of these horror stories. He sent in a check for the 80 cents and they wouldn't accept it. Is this a place, is there a role for government in this? Or should this bank be penalized by customers and consumers going elsewhere?
So, no, there's not a role for government in it. And we shouldn't blow this case too far out of proportion.
Right.
After all, they didn't foreclose on him. They backed off.
Agreed.
Listen, we live in a country with 300 million people. There's going to be weird stories like this about everything all the time. So let's not, jump off the deep end here. But no, I mean, if Bank of America is systematically bad at customer service, we want the market to penalize them and people to take their business elsewhere and go to the friendliest bank in America. That's how you punish it. You don't need new regulations.
What does Wall Street think when something like this happens? So, I mean, to me, the worst thing is their rejection of the 80 cents, and they're beginning the process of the foreclosure.
This is a disaster for PR purposes for Bank of America.
Right.
Listen, and nobody knows better than J.P. Morgan. They foreclosed on veterans, soldiers' homes who were serving in Iraq because they weren't getting their mail and their bills on time. J.P. Morgan turned around and made good by starting an entire division for giving foreclosed homes to soldiers. They will have to make this right. But the fact is, he's correct. Mr. Powell is correct. This is best dealt with in the free market and the media. And what we're doing is we are holding their feet to the fire, saying, how could you do this? Improve your customer service.
The days of It's a Wonderful Life and Mr. Potter and the local Pottsville Savings and Loan are gone. We all deal with these huge banks. Is this something we're going to have to deal with forever, or is there going to be some humanity, some understanding of an error, some reasonable opportunity to make a correction, even when you're dealing with the second or third largest bank in the country?
Well, I think with consolidation, the idea that you can actually penalize these banks by moving your money, there are so few alternatives, particularly when it comes to mortgages. And I think that in some ways, this bad PR does make banks change their behavior, but that isn't the only solution.
The last time Bank of America had PR like this, Ben Powell, was when they wanted to charge everybody $5 a swipe for the debit card swipe. The response was so overwhelming, they withdrew that proposed regulation. Is there going to be any response to this, or should people just be very, very careful when they type in numbers?
You know, the ATM thing is a good example. That's the market process working and correcting it through consumer reaction. And you've got to remember, go back to the It's a Wonderful Life with your small community banks. That type of competition was a product of regulation that limited interstate branch banking. So that wasn't actually consumer choice that we had before. What we're seeing now is the result of the market process, and apparently there's economies of scale in banking that justify this impersonal type of service. If that's what the consumers want, they're going to get it. Maybe it'll change in the future, but that's not for us to know.
Got it. Ben Powell, Liz Clayman, Bridget Harrison. Guys, it's a pleasure. Thank you very much for joining us.